All right, everybody. So I want to go over the steps that I've taken to get $8.34 a month in dividends just in the last 2 months of purchases. So from beginning of June till now, I bought the following stocks: AVGO, FLIC. It's a new one that I didn't do a video on yet. It's a community bank in Long Island and Manhattan, New York area. MasterCard, Visa, Pfizer, and AT&T. Here are all the yields for all of the companies, and we'll go over each one together. First is AVGO. It's Broadcom. Broadcom's dividends. I'm just looking at dividends right now. I'm not looking at share price appreciation or anything like that. Broadcom's dividend, 4.21%. Payout ratio, that's how much money that they're paying into the dividends. That means 60% is going to be paid for dividends. The other 40% will be research development, growing the company as well. 5-year growth rate, 55.55%. That's insane. So I'm not going to actually assume they're going to do that for 5 more years, but we'll be more conservative and say 10 years and see what happens from there. Okay. Next one I bought is FLIC. It's the first of Long Island Corporation. I just bought this today. The dividend growth rate in the last 5 years is 14.18%. Actually had a big jump this year in 41%. Dividend history steadily increases. Financial crisis dipped, but steadily increased after that. Paying 18 cents a quarter. Last year paid 17 cents a quarter. Year before, 15 cents, 14, and so on. So they're paying 4.87%. 5-year growth rate 14.18. The payout ratio is 46.15. MasterCard is next. I did do a video on MasterCard if you want to look at my previous videos. Dividend yield is pretty low, only 0.52%. The payout ratio is also very low, 23.93%, which gives them a lot more room to grow. The growth rate, 5 years, also very good at 24.57%. Okay, also been growing their dividend 9 years. So with that very low payout ratio, they should be able to maintain a pretty high growth rate. Maybe not necessarily 24%, but definitely in the double digits. Visa is another one very similar to MasterCard. The yield's pretty small at 0.6. The payout ratio, again, very small, 23.88%. 5-year growth rate very good at 20%, and they've been growing for 11 years. So the actual dividends will not be too much in these, but in the very long run, this should be helping in dividend payments, and you should probably see some price appreciation in the share price in the next 5 years. Pfizer, 3.87%, pretty good yield. Payout ratio is about half, and 5-year growth rate almost 7%, growing for 10 years. Do a lot of different pharmaceutical products. They're working on the COVID vaccine with Moderna, and possibly one might help. It won't necessarily help the share price dramatically, but can't hurt. And they have very good dividend growths. Last one I'm doing is AT&T. I'm slowly putting this in. Anytime I get $25 back in my credit card rewards, I've been buying a share of AT&T. I have the extra shares to boost it up a little bit. Starting yield is very good at 7%. Payout ratio is a little bit higher, 65%. And doesn't grow much, only 2%, but it's been growing its dividend for a very long time, 36 years. But here's what I did was I took each one of these companies, I took the yields, I took the 5-year growth rates, and the payout ratios just to examine them. Based on the number of shares I bought, this is the amount of dividends I will receive per year. So $26 AVGO, $28.8 point Flick, $3 in MA&B, Pfizer $19, and AT&T $18. When you add all that up, it's $100 in dividends per year. I also broke it down by month by dividing by 12, and I should be getting $8.34 per month in dividends. Nothing super exciting there, $8 a month. Maybe you could buy fast food, hopefully. But as you're going to see shortly, with these very strong 5-year growth rates, these dividends will go up dramatically. This will be the yearly payment in 5 years. So what I did here is I went to dividends.com, or marketbeat.com/dividends/calculator. I entered in the starting principal. First one, AVGO. That's how much I actually have in share price. Let's assume I'm not going to put any more into it. Let's also put no taxes. And then I put in the current yield and the dividend increase. Now, if I put it for Broadcom, I don't think they're going to go 55.5% growth rate on the next 5 years. So I did 10% for AVGO, which I think is very conservative. It could possibly go up more than that. But at 10% growth, you put all these in, 5 years invested. I'm not doing any share price appreciation either. In the next 5 years, there's probably a good chance that most of these will be worth more per share than others, but I'm not counting on it. Just want to look at the dividends. We'll see annual dividends increasing every year. The cumulative dividends, that's how much I get every year, also goes up pretty dramatically on a 10% growth rate. So it's 42.8 as a yearly payment in 5 years. Remember, this year I'm getting $25.03. If it grows at 10% per year, it's going to be $42.80 in just 5 years. That's the power of high dividend growth companies. So do the same thing for the others. For Flick, 14% growth rate. It'll end up being $61.62 instead of $28. It's going to more than double its payments. Next one, Visa, MasterCard has very high growth rates. I kept them in, even though the yield is small. It should more than double the payment, so $3.20 to almost $8 in 5 years. $3.60 to $7.50 in 5 years, so more than doubles its payment. Pfizer with the pretty high yield but fair growth went from 1976 to 29.89, so went up $10 per year in dividends there. And AT&T doesn't have much of a growth rate, but the yield is very high. By reinvesting that dividends into more shares of the company, it does go up pretty high, from 1872 to 2694. That's the power of reinvesting dividends into more shares of the stock. The total dividend column will be the cumulative dividends. I just took the 5th year number, and you add up all your dividends for the 5 years. 166 for AVGO, Flick $216, Visa MasterCard about $26, Pfizer $121, AT&T $113. Add it all up, you get $670.43 in total dividend payments. Completely passive income. I could just leave all these companies completely alone. If it does pretty close to whatever their growth rates were in the past 5 years, so this 5 years, there's a very good chance it's going to be very close to this amount of money for just literally keeping it there. You just wake up in 5 years and suddenly see $670 more from just these companies. If I take the amount per month, instead of the $8.34 a month that I'll be currently getting, we're going to be getting $14 a month, and that's 5 years of growth. Just reinvesting dividends. Assume the share price does not change at all. Assume that the dividend yield stays the same this year and grows at the average 5-year growth rate from there on. Of course, there's a lot of variables with that, but it's good to actually look at the numbers to see how much it changes. Going from $8.34 to $14 in 5 years almost doubles it. In 6 years, it's essentially doubled. Just add another year of growth to it. So I'm at the point now, I think, in my investing career where I'm very happy with my monthly paying dividends. I'm getting about $115 a month in my Realty, Maine, SPHD, KBWY. Very happy just keeping that there, letting it grow, sell a few covered calls on that. Now I'm going to be looking at way down in the line, 20 years down the line, 25 years down the line when I'll need this money. I'm looking for pretty good growth rates in my dividends. I don't necessarily want to get a lot where the yield is 1% or less, looking for around 3% minimum, but I want these 5-year growth rates to be at least 8, possibly closer to 10% in the long term. I'm still looking for other companies to do this with. Most of these, AT&T, Pfizer, AVGO, are all in VYM already. And I do plan on putting a lot of money into VYM in the next few years to get the asset allocation up to it, to get some high yielding and pretty good growths. Also looking for a few, maybe 3 to 5 total more companies like Flick. local regional bank, possibly a Visa, MasterCard that are not in BYM, but more of those smaller companies that have good starting yields and good history of increasing dividends. So if you know any companies like that you'd like me to do an analysis on, it will not only help you, it will help me because that might be a stock that I choose. Please let me know in the comments down below. Like, subscribe, hit that smash button.